afternoon. First, I want to welcome everybody to the webinar today. Of course, today is the 15th of September, so we're midway through the month of September already, and we're winding down to the end of the third quarter here of 2016. It's been a long time since we met. Boy, it seems like eons, because I actually managed to get away, so I wasn't available for the last get-together. So it's been kind of a long time. And obviously a few things have transpired since then, which we'll look at today on some of these charts. So today what I want to do is what we typically do. I'm going to go over the PowerPoint, the presentation in terms of the indexes, Apple, GDX, XLE, and then we can go to some live charts to see where we are and look at a couple other stocks, if you will. And we have an opportunity to do that, obviously, with the market being open, which is why I like doing this webinar during the day. So at any rate, let's start out with Apple. Now, this is the chart of Apple from the last time we convened. Okay, you can see this is dated August 18th, and you can see what happened here. There are a couple of things I was pointing out. Number one, Apple had broken above the mid-band, okay? It was somewhat consolidating the last time we met up at the highs there, right around the 107 to 110 level. And interestingly enough, the 200 was getting very close, flattening out. I was looking for a cross up to the upside, and I think when that happens, it's going to be a really great opportunity to get long on the next pullback. All right, now we can see what happened here. This is yesterday's chart. And what's kind of interesting is Apple came down. Okay, now again, we've had a horrific market sell-off. It really happened last Friday. It was really primarily confined to one day, but nonetheless, it was a huge sell-off. And I'll show you the daily chart in a little bit of the S&P. But nonetheless, Apple pulled back. It came down to back to the mid-band and kind of what I would call tested the mid-band. Okay, and then of course it reversed. And where the up arrow is, you can see it's getting very close to crossing up. When I say crossing up, the long-term cross-up, which is the 200 EMA crossing above the mid-band. And right now they're within less than $1 of each other. The 200 EMA is 103.29. The 253 is 103.66. The 50's already crossed up. Okay, so we've had this spike up in Apple with a huge high volume breakout yesterday. And again, this was based on, of course, the release of the iPhone 7. Here's the 60-minute chart of Apple, okay? And it's got the corresponding support resistance levels. And yesterday it essentially hit the 112.50, which is the level I was looking for. But if you look at this chart, what's kind of interesting about it is when it came down to retest the mid-band on the daily, which is back here, okay, it also retested the support line, which was 103.13, and then it reversed off of that, and it's jumped about $11, and I believe Apple's up a little bit more today. I think it's up and actually hit the 115 line. I'm not 100% certain, but I think it's very close to that. So Apple in 4 days has made a tremendous run when the market really hasn't done much of anything. Now here's the 10-minute viewpoint. After I'm done with the PowerPoint, we'll take a look at today's chart of Apple. But here's the 10-minute chart of Apple, okay, showing the resistance levels and the violation of the resistance levels, kind of the pullback off of 112.50 yesterday. And again, the fact of the matter here is that, oh boy, sorry about that. Let's postpone that. The fact of the matter is it broke the upper band yesterday, okay? And, it had the anticipated little pullback, and then it's jumped back up. Now here's the S&P 500, and I'm going to start with the 60-minute chart. We'll look at the daily chart a little bit later. But I had been anticipating a reversal for two reasons, and the main reason being that the S&P, or actually the market, really had two selling climaxes. Okay, Friday really counted as a selling climax, and I believe Tuesday did too. Now you can see here on Monday how oversold it was. It was way underneath the lower band. And, you know, that first bounce back was about 43, 44 points. And then, of course, it came back and took it out again. Actually took it out again yesterday. So we had three shots where it was trading below the lower band. Today, of course, we got back above it. But what's been kind of interesting about this sell-off is the fact that it came right back down to the 21.25 level, which I would expect as support. And if you look at the charts, for the last 3 days, it essentially closed above the 21.25 level. For this market to move lower, it would have had to close below 21.09, okay? But it found support at the 21.25 level. And, you know, the question was, when were we going to get this rally? Honestly, I thought yesterday we'd get a strong bounce, and we never got it. All right, but nonetheless, yesterday, if you look at this chart, it came back to the 21.19 level. Okay, so we've had basically three lows right around 21.20, and yesterday it closed at 21.25.77. So it still was able to manage to close above the 21.25 level. Now here's the 10-minute chart. Now we've got the 60 underneath the lower band. Here's the 10. It slopped down to underneath the lower band. Here was the rally back, came back to this, right to the 200 EMA, and then again, it sold off. So that's kind of your typical pattern, all right? You kind of expect another move down, another drive down, once those lower bands are violated. And particularly the 60 was still under the lower band, and then the 10 was underneath the lower band. Now let's go to the VIX. The VIX had the huge spike up as the market was cratering, all right? And here's your 60-minute viewpoint. So again, it came back down and kind of snaked around that 1250 line, and then it screamed, okay? And, you know, it's basically the main movement on the VIX was last Friday. And you can see it peaked out at 1912, just above that 1875 level, okay? And again, the last couple of days, it's actually traded above the upper band. And then here's the 10-minute, okay? So when it came back down, got just below 1563, it was way oversold on the 10, and then it came up, and look, here's your failure, right around 1875. And then it pulled down. And of course, today, I believe the VIX is starting to break back down. So here's the diamonds, a relatively similar pattern to the S&P. Okay, similar in the fact that it broke underneath the lower band. Okay. And interestingly enough, unlike the S&P, which never got down, let me go back to the S&P chart here. Usually, if this level is violated, okay, it usually will come down to the next confirming line, which is that 2109 level, and usually that's where it finds support. Now, the S&P never even got that low, whereas if you look here at the diamonds, it did. It broke the major, 181.25 level, and essentially stopped at 179.69. Very similar pattern. Reclaimed the lower band, and then guess what? Broke it again. So I fully expect, because it was below it, I would expect at some point we have another drive down to retest the lower band. And then here's the 60-minute viewpoint with, of course, the numbers. Slightly took out 182.81, and then, of course, a gap down yesterday, all right, actually 2 days ago, and continued down to retest 179.69 again. Now, here are the Qs. The Qs, of course, have been the strongest of all the markets here, all right? And I'm going to say the NASDAQ in general, but a large part of that, too, is because of Apple and the movement that Apple has been making. But what was kind of interesting about the Qs yesterday is that when it pulled back, it still managed to close above that 115.63 level, all right, which I thought was tremendously bullish. Closed at 115.84. So unlike the other two markets, you can see here from this chart, the Qs never broke underneath the lower band, all right, whereas both the S&P 500 and the Dow and the Diamonds did. So again, you know, this is indicative of the fact that this is definitely the stronger market. And then again, here's the 10-minute viewpoint. Now, what's interesting about this is, this, to me, this buy here, just above 112.5, was probably a better trade than the S&P. And I say that because the 60-minute chart never got below the lower band here. And of course, it rallied back up. It kind of stalled right at the 200 EMA, which was right at the next upside confirming line at 116.41. And then it pulled back to the higher bottom here. And then, of course, it proceeded to move up. It bounced again right off the 116.41 level, which is right around the midpoint. So for the Qs to move up, I would expect it to take out the mid-band. And here's the TLT. Okay, now, the TLT, of course, has been getting slaughtered based upon the rhetoric that, you know, there's a possible rate hike coming next week. Quite frankly, I don't believe it. I don't believe it because I see a lot of the high-yielding stocks are really setting up for buys. All right, they're not really breaking down as you would expect. TLT here is way oversold. Again, we know that because it was way underneath the lower band. Now, what's kind of interesting about the TLT is that it's similar to the diamonds. When it broke the major 134.38 level, it essentially came down and stopped at the 133.60 level, which is the downside confirming line. All right, and then it's had a bounce. Now, unlike the Qs, all right, it didn't close above 134.38. It closed at 134.28, so still 13 cents under that. So for the TLT to move higher, you know, it's going to have to reclaim 134.38 to move up to 140 or even 137.5. It's going to have two closes above 136.72. Now, the thing is this, at the very least, I would expect a retest of the lower band again, all right, because it's been trading underneath the lower band. So we'll look at that after the PowerPoint's done to see if it's actually reclaimed that level. But here's the 10-minute viewpoint, and you can see again, you know, where it broke down, took out the 134 level, okay, essentially found support at 133.60. All right, and, you know, as I said, it's within 13 cents yesterday of closing above 134.38. So here's gold and oil. Okay, here's the GDX. Now, on the 60-minute chart, the GDX has moved into a downtrend. It's been in an uptrend for quite a while, and it did finally move into a downtrend. It moved into a downtrend roughly the middle of August, where the down arrow is. But 25 should be the major support line. Bounced up, basically failed at the next level, which was 28.13. and has moved back down. And then here's the 10-minute viewpoint. You know what? Let me just take this off here, guys. Move back down. 25.78 is the upside confirming line. So yesterday it closed just above that. All right, so if it did close above 25.78 today, it should try to retest 28. And again, we'll look at it live in just a few minutes. Now here's the XLE, because the XLE, of course, has been selling off rather substantially as well. Now, having said that, what's kind of interesting is this is the similar pattern to all the other markets we've kind of looked at. Okay, it came down. Let me get a pen color here. Well, stalled up against the band. No, that's not good. Okay. Stalled up against the upper band, right? Came down, broke 68.75, right? And look, it stopped virtually to the tick at the downside confirming line, which was 67.97. Came up, retested 71.88 again, all right? And then, of course, a gap down on the 9th and proceeded down. Now, yesterday, it did close under 67.97. So for the XLE to move lower, and the next level down would be 65.63, okay, it would have to close under 67.97 today, right? For, I would say, the bearish scenario to be invalidated, it would have to close above 67.97 today. And here's the 10-minute viewpoint. So you can see yesterday it was within 40 cents of the 67.97 level. But nonetheless, it did close underneath it. Anyway, that's what I wanted to cover. And then I want to go over some live charts of these instruments as we're talking. We can look at them live. But before I do that, shoot any questions through regarding any of the indexes. Hey, Greg, did Trump say anything influential? Just curious. Can't believe he's talking. He just started right before the webinar. I would have really liked to hear what he had to say. You know, everybody's looking for something different, obviously. I put it on the yeah. Everybody's looking for something different. The problem with Hillary is we know what we're going to get. It's going to be more of the same old. And unfortunately, that's the case. I saw somebody yesterday being interviewed on CNBC who made a statement saying, look, I was kind of hoping they'd both get indicted and we could start over again, which I thought was a pretty interesting comment. But anyway, excuse me, before I close this down, shoot any comments through or questions on any of these particular charts, and then I will close down and we'll look at some of these instruments live. Okay. All right, I don't see anything, so I'm going to just close it down. All right, now, let's take a quick look here. Now, here's the S&P on the daily chart, okay? So we know, let me go back to the PowerPoint here. Where are we? Okay. Yes, well, no, 2250, I think it's possible. And I'm going to show something here. But the problem with the 2250 is obviously the major impediment to hitting 2250 has been the 2187 level. that's been really strong resistance, and I'll show that in the daily chart in a minute. But if we look at this chart now that's on the screen, we need to close above 2140.62. Okay, that's the level we're looking at. Now today, we're at 2142 so far. So we rallied back to get above it. If this holds today and closes above it, and we can close above it tomorrow, the objective is back to 2187.5. But if we look, okay, let me put this chart up here. Okay. All right. Down here on the bottom, we have the down to up volume plotted, okay? Now again, the down to up volume is simply a measurement of the number of shares trading to the downside versus the upside. Okay, now, what I thought was incredible about this sell-off on Friday was that it was a huge, huge selling climax. I mean, it was tremendous. And you can see by that spike there, all right, it was, the reading, if I'm not mistaken, was something like 31.5. And typically, as you know, I'm looking for 9-to-1 level and measuring 9-to-1 down to up volume versus, down volume versus up volume as being a selling climax. So Friday's level was just over 3 times the minimum required for a selling climax. All right, which told me that, okay, we're going to have a reversal. All right. Question is when. All right, and can we time that reversal? Quite frankly, I didn't expect us to kind of, if you will, kind of trade back and forth. I did only because we were under the lower band on the 60. I expected a little more consolidation before we move. I'm still inclined to see a retest to the lower band, and I'll show you the 60 in a minute here, but clearly the objective is back to the mid-band on the 60, which is about 2170. Now, the point being here is this. We had the huge selling climax on the 9th, all right? And then Tuesday, I was looking at the market, okay, and I'm on, wow, and I'm looking specifically at the down to up volume. I'm watching the market sell off and pull back, and the down to up volume was gyrating like a pinball. And quite frankly, I don't think I've ever seen it with such wild fluctuations intraday. And when I say wild fluctuations, at one point I'm looking at it's like 20, and I go back 5 minutes later, it's reading over 40. Then it's reading 30, all right, and it bounced all over the place. And then as you can see here, this is the day right here. It ended up settling, I think, around 25. So the point here is we've had 2 selling climaxes. We've had 2 selling climaxes during, hang on 1 second, guys. We've had 2 selling climaxes during this recent sell-off, which, as you know, usually 1 is enough to turn the market, especially one of this magnitude. But with 2, I fully expect to move up. And again, the other thing I want to point out here is that, if you look at this, Chaikin money flow has still been positive. So on the daily chart, it's never really moved to a negative. All right. So today, so far, we're back above. Now we're creeping up a little bit more. But we're above the 2140 level, which is the level that I would expect. And again, if we look at this chart, the other thing that would be powerful is a close above yesterday's high. So, we do that, and I think it'll be viewed as other technicians as being a very bullish sign. Now, the one thing, let me bring up something that I track so you guys can see it, and I'll point it out to you. Okay, I track, every day I track the closes and the open, high, low close for the S&P 500. Seems to have been frozen. Let me see here, guys. No, that's not going to work. Sorry. Let me try it once more because I think this is really interesting, and I think you'll find this to be... Okay, let's see if this works. Okay, I don't know. For some reason, it was frozen. But every day, this is what I track, okay? And you'll see, I make comments, like here, both down, okay? And usually, by the way, when the VIX and the S&P both close in the same direction, to me, it's indicative of an event coming, okay? And you can see here on the 7th, it happened. Now, the reason I bring this up, let's take a look. Where's the 7th? The 7th would be right here, this day. So as I said, it's usually indicative of an event coming. Now, voila, that basically predicted that we would have a sell-off. Now, again, I've said this many times in the past. I'll repeat it. The one thing we can generally predict a reversal, okay? The thing that is very, very difficult to predict is the magnitude of that reversal, okay? And quite frankly, guys, if I could predict that, the magnitude of the ensuing move, we'd all be very, very wealthy, all right? That's a very difficult thing to predict. Nonetheless, the reversal is what we can predict, okay? Or at least attempt to predict, okay? And, or at least have a reasonable expectation that that reversal is coming. Now, there were a couple of reasons why this market was, in my opinion, kind of failing. As you know, the 2187 level has been the level that we've struggled at, right? Kind of a bad drawing, but that's the price level, 2187.50. And what's very interesting about this is, obviously here in July, we never closed above it. In August, I believe there was one close above it. Now, as you know, I typically look for two closes above a level to consider that level being violated. And that never happened at the 2187.50 level. All right. We had one day that closed above it, and it quickly gave it back. And let me see here. If I bring up the Excel sheet, you can see here, even these 2 days on the 6 and 7 closed underneath it. Okay, and then obviously the 7th we had both the VIX and the S&P closing down. But if you go back here to this chart, here was a day here on the 18th that closed just under it. This was the day that closed above it. This was the August 15th, which was, I believe, that day right there. And then the next day promptly gave it back. So we never had two closes above that key level. But the thing I want to point out about this is, and I think you'll all find this kind of interesting, is this. Okay. This was the last time we had significant readings, okay? And this column here is a down to up volume, which I track. Now you can see here, this goes back to a year ago, August 21st of 2015. On that day, you can see the market was down 65 points, roughly. The down to up volume was 1732. The next day exceeded it. It was down 78 points, and the down to up volume here was 4108. The next day, it was lowered significantly, and it was still down 25 points. And then it proceeded to rally. Okay? So you had a little bit of a follow-through, and then we had a rally. Now, I bring this up because if we look at this, this is the low here. If you look at this in what? 1, 2, 3, in 4 days, the market rallied about 120 points off that significant double selling climax. So if I measure this and I say, okay, let's say we replicate that move off this last low, that would bring us to 2239, which is almost at that 2250 level that I had mentioned, a while ago. And I think that is the level that ultimately the market wants to go to. But, we'll see. I mean, we have these shorter-term objectives to help us discern if the market should continue up. And obviously, right now, the major short-term one is 2 closes above that 2140 level. All right? And then again, we've got the resistance line at 2187.5, which the market's going to have to clear. But what's kind of interesting about this chart is that, even back here off the Brexit vote, look at that 2-day slide we had off the Brexit and then the ensuing reversal. And if you look at that, by the way, that was probably close to a 120-point move in the market in 4 days. But that selling climax off the Brexit vote was really not that huge. I mean, right now, we've had an enormous selling climax, and we've had 2 of them. So I think this paves the way for higher highs. Now, if I... let me see something here. Let me put up a weekly chart. We can look at it on a weekly chart. Okay. Just to show you what I'm talking about, this bar here was probably that August 15th bar where we had the climax. And then you can see what happened. The market essentially, kind of bounced up. We hit that little peak, came back for the higher bottom, and then look, the market was off to the races. Now we had to sell off into the February bottom this year. I think the whole point of this is that, when you use this measurement to measure the market in terms of these selling climaxes, and then we combine them with our levels, we generally come up with low-risk areas to enter the market, and that's really all we're trying to do. So let's go to a short-term chart here. Let's see what's going on here. All right. So now look at this. We bounced up. We're sitting right at the 200 EMA here, right? And we're just above the 2140 level, and we're a little bit overbought here. But what's kind of interesting about this is on the 10-minute chart, we're getting money flow turning positive. On the 30-minute chart, we've got money flow turning positive. And let's see here on the 60. All right, 60 is just slightly positive, all right? So, to me, there's a possibility we may come back to test this 2130. We don't necessarily have to test it exactly. I mean, 2130 would bring you in here. on the 10-minute. So that's about 11 points from where we are. And, you know, it might come down and just pull down slightly and form a higher bottom. And that's typically the pattern here. But here's the thing, too, okay, because you can see the VIX is starting to stall out. And the VIX may pop up. But the VIX has made a lower low here, so odds are it's going to head back down. But here's the thing. We look at this 30-minute chart, right? And the mid-band on the 30 is 2169. On the 60-minute chart, it's 2171. And typically, once it holds support above the lower band, the first run is usually back to the mid-band. So to me, that's probably where we'll get a reaction. You know, we'll find out if that's the case. Excuse me, when it makes a run up there. Okay. But Apple has been obviously one of the driving forces behind the Qs. And look what happened today here. Now, as I said before, you know, during the PowerPoint, 115.63 was the next objective up. And it stalled today right here at 115.51. I would expect a bit of a pullback here on Apple. See, look at how high above the upper band it's trading. It's like the exact opposite of the indexes. And let's look on the daily. I want to see if, okay, very, very close to crossing up now. The 200 is 103.41. 103.67 is the mid-band. So at this point, it's within 26 cents of the crossover. I really think that once this crosses up, you know, on the next pullback, Apple's going to be a really, really strong buy. But you can see it's, you know, it's above the shorter term, shorter term Bollinger Band. So, you know, it's a little bit overbought here. I shouldn't say a little bit. It's quite a bit overbought. And the XLE was the other instrument we wanted to talk about. Now, look, it's at 68.53, so it's reclaimed that level. Now, again, you know, one close under a confirming line doesn't constitute the fact that it's going to continue down. And most of the time, when it comes from above a major level down to a lower level, most of the time it does reverse. And that's what we're seeing here today in the XLE. And again, you know, I point out on the XLE daily chart here that it's been in a really strong uptrend. But, you know, it's kind of interesting because you look at this chart, the prior pivot low was 67.77. Yesterday's low was 67.40. And as we know, 67.77 was virtually on the downside confirming line. I think the line was 67.97. And then yesterday was 67.40, okay? And you look at this and you say, well, geez, you know, it made a lower low, but look what happened here, too. It made a higher high. So now the question becomes, okay, well, what's the odds of this doing? You know, are the odds going to head up or is it going to head lower? Well, the thing that's important is that if it does reclaim that downside confirming line, then I would expect it to challenge the next major level to the upside. But again, that's the benefit of having these price lines, you know, where we can kind of make logical decisions. And, you know, the other thing that's kind of important about this XLE chart is that you can see how the 200 is spreading from the 253. It's in a strong uptrend. Now, let's see if any of the, you know, I'm assuming some of the oils, okay. Now, Exxon is reversed. All right. CVX is showing a lot of strength here. PSX is more of a refiner, but look at how strong that is today. And then look at HFC. That's up $1.50. Tesoro is the one that I particularly like. Look at this. That's up over 2.5%. Let's see what Western Refinery is doing. Okay, that's up as well. So, you know, they're all making some really nice reversals today. And let's see, CPE is another one. Right, look at CPE now. This is a lower priced one. This broke out. Look at that breakout, about $8. It hit almost 16. And now looks like we're reversing here. The reason I bring this up is because by tracking that XLE, all right, like for example here, we look at that date, that was August 2nd. We go back to this last chart on CPE. On August 2nd, it reversed right along with the XLE. And look at that move. That's up like 60% in the time that the XLE reversed. So that's kind of an interesting, and I'll bet you, let's go back to ZOM. All right, Exxon didn't make nearly as strong a move. Let's see what some of the pipes are doing. All right, this is a pipeline. Okay. Slight reversal. And then KMI, a slight reversal. And the other one is ETP. And again, that's kind of holding support there too. So anyway, that's what I wanted to, those are some of the deals I wanted to talk about. Now, does anybody have any stocks we want to take a look at while let's take a look at VIPS, by the way. Let's see what that's doing. Okay, so that's up to 1381. So that's good. We'll see if we get assigned on that. We're about 20 cents out of the money. You know, and I got to tell you guys, with the VIX trading at such low levels, it's been really, I got to tell you, it's sad. You know, I remember we could do these deals, especially on the weekly basis. You know, we'd grab 3, 5, maybe 7% in a week and a half. And, you know, I look at some of these deals and it's like, you know, it's like a 1%. I mean, it's not even worth selling options. And while I'm on the phone here, let's take a look. For example, steel. I do believe that U.S. Steel is going to make another run. Let's take a look here. But let's go to Yahoo, just for grins. But it's already up on... making some brash statements. Now, steel is trading just over 16. Now, let's forget about this week's. Let's look to next week's. Now, these calls expire next Friday. All right, well, actually, this isn't bad. The 16.5, they're quoting at 55.56. That's not bad. So look at that. We're getting a little more juice back. And even the 17 is 35.37. That's about $1 away. So say you got 36 cents for that and you were assigned. That's almost an 8% return. That is alluring to me. That's alluring to me. So again, guys, that's something you want to take a look at. And you know what? We get a reversal here on steel. I may just suggest we do that. Now, this is a 2-hour chart. You can see it was above the upper band. It was above the upper band on the daily. So I do expect another rally up on U.S. Steel. You can see it's been oversold here. It's tremendously oversold. So this is one I'll definitely be looking to put on. See if we can grab some profits on that. The other one I've been looking at, which is intriguing me, is Sienna. I want to see if it closes a little bit higher today. But I would structure this as a debit spread. And one of the things that I'm kind of intrigued about with this is that you can see it had reported earnings. Okay, that's what that gap was, and now it's been kind of pulling back a bit, but the daily is very close to moving into an uptrend. Let's see here on the 60-minute. I'm sorry, this is a 2-hour. So there's the 2-hour viewpoint. It's back to kind of the 200 EMA. And when I say a debit spread, what I would do is, I'd buy maybe a 21, sell a 23. Depending on the price structure, we might be able to have a net debit that's very small in relationship to the reward. So anyway, that's kind of the stuff I wanted to cover today. The main thing is that selling climax. And then, of course, we know what to look for now. Ideally, I'd like to see that close above 2140 today and tomorrow. Right? Now, it's possible we might have the pullback to retest somewhere around the lower band on the 60, which is around the that 2130 level. And then that, to me, would be the buy. But what's kind of interesting about this whole market sell-off is, it's all been kind of manufactured by the talk of higher interest rates. And, it's interesting because, nothing was really said by the Fed. I mean, it just, that's the TLT. There were kind of whispers coming out of the Fed that, we're probably ready to raise rates and all of this. Personally, I don't see it, but you never know. They could come up next week and raise them, maybe raise them 1/4 of a point. I saw Jamie Dimon the other day saying, well, what's the difference? Raise them now, just get it over with, blah, blah, blah. But, I don't know. I really don't see that happening, especially not before the election. But look at the rates. This is the 10-year rate. And again, going back to some of our technicals here, look at, where's the, I mean, underneath the lower band, they rallied, right? And look at the peak yesterday here at 1.73%. And that's kind of interesting, right? Look at how much they jumped. They basically jumped like what, 30-something basis points. But what's kind of interesting about it is that the lower bands kind of predicted it. You know, the rates were way oversold. I mean, I think, you know, the logical scenario is they may go, if they go a little higher, they might stall in here and then head back down. You know, what makes this kind of interesting, guys, is by tracking this. For example, here's a high-yielding stock. It's a BDC. Now, let me go back to this here. Let me put up a little more time here. Let's put up 8 months. Okay. Okay. This is the actual rate itself. Now, you can see here that it peaked back here. It was in a downtrend, right? Got overbought, right? And if I look at that day, that was March 14th, right? So if I go back to this chart, for example, of Ares, okay, I say, okay, March 14th is in here. And again, you know, what's interesting is that got oversold by virtue of the fact it was underneath the lower band. And look at this. It was trading the pivot low there was 11.30.38. It went up to 16 bucks. Now, I bring this up because that's roughly a 39% gain on the stock. And the stock itself pays 38 cents a month. I'm sorry, a quarter. So if you grab 2 quarters, you know, you made another 76 cents. Say you paid 11.5, you made another 6%. So if you think about this, that's almost a 50% gain between, you know, capital gain and dividends since, you know, since the end of February. That's what, 8 months? So that's a pretty good return, and that's just trading off of interest rates. And, you know, again, look, I highly advise, if you have the wherewithal financially in your account, to track some of these high-yielding instruments and track the TLT and the rates, because, you know, as rates go up, these stocks are going to sell off. But if the rates are continuing to drift down, their return becomes more attractive. So, you know, that's why, you know, you can see like a 40% gain on a stock like this. I mean, here's another one, and I'll show this one. Prospect is the other one. Okay, now look at Prospect. Prospect was way under the lower band here back at the same time Ares was. It dropped to $5. Now look, it almost hit $9 in August. You know, let's say you got $3.50 on a $5 cost. That's a 70% return, okay? And this pays 8 cents a month. So say you caught what, 1, 2, 3, 4, 5, say you caught 6 months at 8 cents, that's 48 cents on a $5 stock, that's 10% right there. So if you think about it, that's about an 80% return in 9 months. Just tracking interest rates and high-yielding stocks. You know, a lot of people think, okay, this is boring, but the fact of the matter is it can be incredibly lucrative if you follow the stocks and you follow the rates. And again, we have the ability to do that through the levels in the TLT. And of course, you can look at the actual interest rates themselves. And again, you can do this with you don't need hundreds of thousands of dollars to do this. I mean, if you think about it, that stock was below $5. I mean, even on $2,000 investment, that's what, 400 shares. Plus, so if you think on 400 shares, you're making $32 a month, which isn't bad on a $2,000 investment. Holding that for 6-7 months, that's what is it? It's over $200 right there, and then you have a gain of roughly, $3.50 on even 200 shares. It's another $700. So that's a nice return, and again, it's a pretty conservative strategy. Okay, because again, as yields go down, these stocks are going to be worth more. So it's just always something to think about, if you have the wherewithal to do that. I happen to like these BDCs because they are very high-yielding instruments. And obviously, their yield goes up as the price of the stock goes down. I mean, here's another one. I didn't put this one back on, but I've owned this in the past. This was about $9. It peaked at 14. Right now, today, it's trading at 13. Would I put this on now? No. But the point was this. If you look at these stocks, they're all in strong uptrends. Even agency. Here's another one, American Capital. That dropped to 12, and it hit 17. And again, look at the uptrend this is in. So that's why I say it leads me to believe that I don't believe they're going to raise rates. I believe this is simply a, if you will, an overbought condition on the TLT. Call it an oversold condition on the interest rates. And they've jumped them up, and they've made a little bit of a counter trend move, but I think they're going to start coming back down. And certainly if they don't raise rates, that'll be the case. Okay, any questions? If anybody wants to look at anything, let me know while I've got the way, and I'll keep the webinar open here, guys, as long as you guys have any questions. If there's no questions, then I'll yeah, right. Well, the best way to track it is just like I'm showing you, as far as the, yeah, you too, Greg. You have a great, yeah, good. I'm glad you got some decent weather. Man, it is beautiful out here in Jersey today. And I'm sure Shin is happy in New York. I don't know if it's the Fed, by the way, Shin, lying. To me, I think it's a manufacture of, these people planning it. And, it's like the other day, I turned on CNBC as the market's cratering the other day. And now every pundit is talking about how overvalued the market is, how everything's going to hell in a handbasket. And my opinion is, when I start hearing that, I know the bottom's not far away, okay? And I also, we also have the benefit of looking at hard facts. Forget about the bullshit rhetoric that these guys spew on CNBC, all right? We have hard facts. That hard fact is simply the down-to-up volume. So we look at the down to up value, and when we see this massive selling climax, you know, that's all the uninformed selling. Okay, so you know at some point when all the selling is extinguished, the market's going to go up. And, you know, all the smart money is coming in and scoffing up product, and, you know, they'll just sit and carry it up to the next leg, and you know, then they'll bail out, and, you know, next thing you know, you'll hear the same kind of rhetoric again. But here's the thing with the TLTs. I mean, this to me was the disconcerting thing, okay? We got way above the upper band. The fact that it got above that wasn't the disconcerting element. The fact that we came up here and failed was the thing that was the disconcerting element, because, you know, usually it makes that retest of the upper band and then it fails, okay? If it broke through the upper band again, okay, that means it's going to usually have another rally up, like back here. Okay, back there, it broke through it, pulled up, came back, 125 was a support line, made a higher bottom, continued up. And our level is what, 143? We have a major level right at that, right above that. I don't know if it's on this particular PowerPoint. It's difficult for me to remember every single level. 140.63 is the level, okay? And then just above that, oh, I can tell you. The level above that was 143.76. Okay, so if you think about it, that was the major level, right? 143.76. It's still the 143.10. So we know that most likely it's going to start heading down because it failed to get through that level. And again, we also know because it was above the upper band, it creates all sorts of probabilities. Probability one is we should make another retest. It made the retest, lower high here, and same thing as the S&P, it's kind of consolidated. All right, and that's what it did, and then it finally broke down. And then again, what you can do too is, like I said before, you can go and track T, Y. You can look at the actual 10-year rate, which is this symbol. And, you know, again, what happened here? The 10-year rate was below the lower band, so this was way oversold. And it finally, you know, it finally had to bounce. But you can see now it's starting to head down, okay? And the TLT, well, we can, you know, obviously you can look at the next levels. Let me see. The next level is 133.60. Right now we're at 133.39. So right now, today would be, if it closed today at 133.39, would be the first close under that 133.60. If we did close underneath it tomorrow, I would expect the TLT to head lower. But most of the time, this stuff is, you know, basically, you know, a correction from an overbought or an oversold condition. I think clearly the trend is still up on the TLT. I don't believe we've had a major trend change yet. I don't think that's going to happen until the Fed actually does start raising rates. Okay. All right, good. But you know what I prefer is the high-yielding stocks like the BDCs, especially the ones that pay monthly, because to me, you know, for example, I'm a big fan of Prospect. I own a lot of Prospect. You know, I'm remiss to say that I didn't add to it, you know, under that lower band there. But what's really nice about this stock is, you know, it pays monthly. It pays like $8 5.33 cents or something every month. So if you think about that, 8 cents a month, forget about the other integer, that's almost $1 a month, a year. So if you want to look at it another way, that was $1 dividend, and say you bought it at 5, that's a 25% return. So for argument's sake, say you put 30 grand into that, you know, or let me round it, I'll use 40,000 if you have the wherewithal. If you put 40 grand into that stock when it's oversold, you know, that accrues 10 grand a year. So another way to look at it is in 4 years, the dividends have paid for the cost of the stock. But you don't even have to, you know, think about that. You can trade it, and, you know, like here it was up 70%, right, based upon just the movement up to almost $9. So $40,000 investment, you know, you've got a $28,000 gain. And again, that's going to be a short-term gain. But you've collected 8 cents a month for maybe 7 months. So, you know, that's a pretty stealthy return. And again, that's a boring stock. You know, I look at these BDCs as kind of an alternative to, you know, kind of the weekly covered call strategy. When I look at the weekly covered call strategy, to me, I kind of consider it a super dividend. All right, so, you know, if I can make, for argument's sake, you know, 8 cents a month per share, you know, I'd like to make more than that on a weekly basis selling a call. And again, if we can get called out every week doing that, it's wonderful. But as I said, what's really been kind of a tough situation lately is that the option premiums have been so horrifically low. I think what's kind of nice about now is we had a little bit of a spike in the VIX, and as we looked at steel, you know, to me, that's back in line with kind of the risk or reward I like taking on these short-term options. You know, you put on that U.S. steel trade today, you know, and get called out next week, the stock's got to move $1. Regardless, you're keeping the call premium, okay, no matter what happens. But if you were assigned, it's over a 7.5% return for what, a week and a half? That's a nice return in this market. Okay, any other questions? I'm looking through to see if there's any questions, guys. Let me see here. Yeah, okay. Well, I think I've answered everything. All right. Anyway, guys, I think I'm going to close down for today. We're after 1 o'clock Eastern. Listen, have a great rest of the week, and I'll see you again on the next webinar. Thank you very much. Goodbye now.